Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news we may be seeing the end of markets regarding US Treasuries as safe haven assets, although to be fair, it isn't clear what would replace. Long maturity US Treasury yields rose today to reverse the drop we noted yesterday. The yield on US 10-year bonds rose back towards the earlier 20-month high this week before the percent action, and the yield on the 30-year bond rose back too. A couple of points are worth making first before we review today's data updates. The first is that it has been the role of the Fed to do QE activity. Maybe Warsh isn't keen now because he is committed to shrinking the Fed's balance sheet. It grew because the Fed wanted to push down rates, and that came with the consequence of massive bond buying. In fact, they moved the needle with whatever it takes to the tune of $3.5 trillion US dollars in the GFC and the subsequent stabilisation, and then another $4.5 trillion for the pandemic response that started in 2020. They've only paid down $2.5 trillion since. Warsh wants to get that significantly lower. Now Percent wants to do his own QE, in his case to avoid the political consequences his boss will face and at least put it off until later. But his announcement talks of a doubling, and that is only an extra $2 billion US dollars. The Fed was effective with trillions, but Percent wants to do the same thing with billions. Wall Street hedge funds will be looking for a Percent put, and unless he delivers his objective, the whole thing might collapse rather quickly. Percent should know he was a billionaire hedge funds manager on Wall Street who made his fortune gaming the system. The Percent initiative hardly lasted one day. And this comes as the US Treasury's latest daily cash and debt balances statement show public debt now exceeds $40 trillion US dollars in the US. Why is this important to us? Well, the world's economy is still being driven by the US middle-class consumer demand, the only economic engine large enough to shift the global needle. And we rely on a healthy, upbeat global economy. China says it is making an attempt to duplicate this internal consumer demand, but by all accounts it is not succeeding, in part because Chinese consumers are still very risk-averse and prioritising savings over consumption, and more so recently. Meanwhile, initial jobless claims in the US fell to 172,000 last week, a slightly larger dip than seasonal factors would have indicated. There are now 1.8 million people on these benefits, also marginally lower than the week before. And the August Philly Fed factory survey came in much stronger than expected, building on an outsized July expansion. This is all about current activity. Oddly, new order levels fell, but price pressures did moderate this month there. And the Conference Board said its leading index for the US ticked up in July, marking the fourth increase over the past 6 months. Most components were positive in July, except consumer expectations, which continued to be a notable drag. In Canada, their July Producer Price Index rose from the prior month to be 12.4% higher than year-ago levels. Their Raw Materials Index is up more than 18% on the same basis. Across the Pacific, Japan said its exports swelled 23% in July from a year ago to an all-time record high, boosted by AI-related semiconductors and data center equipment. Meanwhile, imports were up almost 28%, boosted by fuel imports which were up more than 53% in value, and total imports also hit a new record high. The net was a small trade deficit on merchandise. And China held its key lending rates at ultra-low levels in its regular monthly update yesterday, but these very low rates aren't exactly generating a boom, just more holding things together. The People's Bank of China kept its key lending rates at record lows for a 15th straight month, and that is what analysts were expecting. And remember Evergrande? Well, yesterday a Chinese court sentenced its founder and boss to life imprisonment for massive fraud. Orders for Taiwanese exports soared 62% in July from a year ago to a new record high of $98 billion US dollars. That follows the outstanding 59% jump in June. Booming global demand for AI-related and technology products continued to fuel overseas sales. This is on top of a July 2025 increase of 21%, which at the time seemed like an outstanding achievement. Malaysian exports jumped an outstanding 38% in July from a year ago to a record high. This was led by electronic exports to the US. Meanwhile, their imports rose 36%, with the fastest rises from India, South Korea, and then China. In Europe, German producer prices rose in July too, but only at a 3% year-on-year rate. But that was their fastest since April 2023. Australian inflation expectations rose by 0.2 percentage points in August to 4.9%. This follows a 3-month period of moderating inflation expectations. Wage expectations also rose in August after remaining static for a prolonged period. And staying in Australia, full-time jobs rose 16,300 in July, but part-time jobs fell 32,000 in the month for a new decrease in employment levels. So instead of the expected 15,000 rise in jobs, they had a 15,800 net fall. While this may seem like a big movement, in fact the June positive result was quite elevated, so it's a levelling out, probably to be expected. Global container freight rates were up 4% last week from the prior week, to be double what they were a year ago. Outbound rates to China to the US drove the increase, with those up 9% for the week, up 180% from a year ago. Meanwhile, bulk cargo rates fell 7.5% this past week, to be 40% higher than year-ago levels. The US Treasury 10-year yield is now just on 4.70%, up 5 basis points from this time yesterday. The 30-year yield is at 5.24% and up 4 basis points. And the price of gold is up, now at $4,520 an ounce, up $17 from yesterday. Silver's risen another $2 to just over $68 an ounce. And oil prices are up $1 from yesterday at just on $86.50 a barrel in the US, while the international Brent price is now on $93.50 a barrel and up $2. The Kiwi dollar is up 10 basis points from yesterday at just over 59.4 US cents. Against the Aussie, we've risen 30 basis points at 83.6 Australian cents. Against the euro, we're up 10 basis points at 50.9 euro cents. That all means our trade-weighted index starts today at just over 62.9 and up 10 basis points from yesterday. And the Bitcoin price starts today at $72,813 and up another large 6.8% from yesterday. Volatility over the past 24 hours has also been high, just on plus or minus 3.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again on Monday.